A recession is a period of economic decline. It happens when there is a drop in spending. This drop can last for several months. A recession affects the whole economy. Businesses make less money, people lose jobs. It's a difficult time for everyone. Economists look for certain signs to identify a recession. One key sign is a decline in the gross domestic product, or GDP. GDP measures the total value of goods and services produced in a country. 2 consecutive quarters of negative GDP growth is a common definition of a recession. Recessions can be caused by various factors. These factors can include a loss of consumer confidence, high interest rates, and global economic slowdowns. It's important to understand these causes to better prepare for and navigate a potential recession. If you found this information helpful, please like this video and subscribe to our channel for more updates. Experts are divided on whether a recession will hit in 2025. Deloitte, a consulting firm, predicts a 50% chance of slow growth. This baseline scenario sees GDP at 2.4% in 2025 and 1.7% in 2026. The New York Fed's model is more pessimistic. It suggests a 29.4% chance of a recession in the next 12 months. This model uses data from the bond market to make its predictions. These predictions highlight the uncertainty of the economic outlook. It's essential to stay informed about the latest economic data and forecasts. This information can help individuals and businesses make informed decisions. Inflation is a major concern when talking about recessions. Inflation is a rise in the general price level of goods and services. When prices go up, people can buy less with the same amount of money. Inflation peaked at 9.1% in June 2022. It has since come down to 2.7%. However, core inflation, which excludes volatile food and energy prices, remains above the Federal Reserve's target of 2%. High inflation erodes purchasing power. It can lead to decreased consumer spending. This decrease can contribute to an economic slowdown. Tariffs are taxes on imported goods. The current administration is considering aggressive tariffs on goods from China, Mexico, and Canada. Proponents argue that tariffs protect domestic industries. However, critics warn about higher prices for consumers. The impact of tariffs on the economy is complex. Tariffs can lead to higher prices for businesses and consumers. They can also disrupt supply chains and reduce trade. The net effect of tariffs on economic growth is debated among economists. The uncertainty surrounding tariff policy adds to the complexity of the economic outlook. Businesses and consumers are left to navigate a shifting landscape of trade regulations. Section 5, the Federal Reserve's response. The Federal Reserve plays a crucial role during a recession. The Fed is the central bank of the United States. It has the power to influence interest rates. Lowering interest rates can stimulate borrowing and spending. The Fed has already begun cutting interest rates from their multi-decade highs. It projects 2 more cuts in 2025. The goal is to keep inflation in check while supporting economic growth. However, the bond market is pricing in fewer rate cuts than the Fed anticipates. This discrepancy suggests some skepticism about the Fed's ability to manage the economy. Section 6. Key economic indicators. Economic indicators provide insights into the health of the economy. These indicators help economists assess the likelihood of a recession. They also track the effectiveness of policy responses. Here are some key indicators to watch. Unemployment. A rising unemployment rate suggests a weakening labor market. GDP growth. Slowing GDP growth is a sign of economic weakness. Consumer debt. High levels of consumer debt can make a recession worse. These indicators are sending mixed signals. The unemployment rate remains relatively low. However, GDP growth is projected to slow. Consumer debt is also a concern. Section 7. Investment strategies for a recession. Preparing for a recession requires careful financial planning. Diversification is key. It's important to have a mix of investments. This mix can include stocks, bonds, and cash. During a recession, it's generally advisable to reduce exposure to volatile stocks. Consider shifting some assets to more stable investments like bonds. Increase cash reserves. Having cash on hand provides flexibility and peace of mind during uncertain times. Explore defensive stocks. Certain sectors like utilities and consumer staples tend to be more resilient during economic downturns. Remember, it's always best to consult with a financial advisor. They can provide personalized advice based on your individual circumstances and risk tolerance. Section 8. Expert opinions and insights. Expert opinions can provide valuable perspectives on the economy. Economists and market analysts closely monitor economic data and trends. They offer insights that can help individuals and businesses make informed decisions. Paul Stanley of Granite Bay Wealth Management believes the Fed has room to be patient with rate cuts. He suggests that as long as the labor market and inflation remain stable, the Fed can afford to take a wait-and-see approach. Nicholas Colas from DataTrek Research emphasizes that the current market is different from the dot-com bubble of the late 1990s. He believes that the tech sector is fundamentally stronger now, with more sustainable business models. These expert opinions underscore the importance of careful analysis and a balanced perspective. It's crucial to consider different viewpoints and avoid making impulsive decisions based on fear or speculation. Section 9. Conclusion: Navigating uncertain times. The economic outlook for 2025 remains uncertain. While some indicators suggest a possible recession, others point to continued growth. Inflation, tariffs, and the Federal Reserve's actions all play a role in shaping the economic landscape. It's essential to stay informed, consult with experts, and make sound financial decisions. By being prepared and staying resilient, we can navigate these uncertain times and emerge stronger on the other side. If you found this video helpful, please like and subscribe to our channel for more updates.